everybody, welcome back to our channel. And here we do weekly market updates on the outlook. Firstly, SPY has hit an all-time high of 739. So congratulations to all investors of either ETFs or of VOO or 2QQ. But as we dive in deeper on the market outlook, we look at the hourly chart. As we can see, SPY pulled back at approximately of 1.3% within a day. And as of last Friday, we are looking at the all-time high chart. RSI is of 73, which is overbought. And each time it is overbought, we've seen a pullback happens. And here it goes up, and then it pulls back. It goes up, it pulls back. So personally, I am expecting a pullback to happen very soon. And on the weekly chart, we've seen that the SPY has been green for 7 weeks in a row. And on the daily chart, as of 1st March, we are seeing consecutive greens, while in between some red days to date. And looking at the 50 and 150 NA SMA on the yearly chart, the 50 MA has just crossed the 150 MA, signaling a new bullish momentum in the medium and long term. However, short term is bearish and awaiting for pullbacks, as we can see from the RSI, which is overbought. Also, looking at the hourly chart, there are some strong support levels. Right here, right here, and right here, of 731, 724, and 716, which are strong support levels for the SPY to pull back on before rallying, in my own opinion. Secondly, as of 15 May, Powell has retired and was replaced by the new Fed, Kevin Walsh, the new Federal Reserve. And most of the time, as of fast data, volatility increases in the market with new Fed Reserve, as any new policies or plans are unknown to everyone, which increases the volatility in the market. Thirdly, as we can see from the record of past time where new Fed took over, volatility happens for the next 10 to 15 days. In Exhibit 1, we can see when Powell takes office in 2018, the market is very volatile. Within the first 10 to 15 days, it rallied and pulled back and it broke even. And then it rallied again and pulled back and rallied again. While looking at Exhibit 2 of the S&P 500 returns after new Fed hits, we have at least 12 new Feds since 1930. And each of them has a very volatile outlook, with some being in the very bearish, while some is very bullish. So on average, within 1 to 3 months, the market is choppy, lingering within the small positive to negative range, while 6 to 12 months market is positive, and let's only focus on the last 3 new Feds. It is overall positive from 1 month to 12 months. Lastly, looking from the sector perspective, semiconductors appeared significantly overstretched after their recent rallies. For example, in the weekly performance, Nvidia is up 5%, Micron is up 7%. While if we look at the monthly performance, NVIDIA is up 14%, Micron 58%, Intel 70%. And in 3 months, Intel is 137%, and Micron is 78%, and NVIDIA is 20%. And we have Broadcom at 28%, close to 29% as well. As such, both stocks from semiconductors are experiencing a very strong upward momentum recently, making them one of the first areas likely to experience pullback if SPY corrects in the short term. For example, we can look at the 31st March. It has parabolic movement. So is Micron and Intel. Hence, in conclusion, traders may consider opening hedge position on SPY to manage short-term downside risk and increase market volatility. For long-term investors, potential pullbacks would be opportunities to accumulate fundamentally strong and high-quality companies at better valuations. Overall, long-term and medium-term bullish, while short-term bearish. And that's the end of this video. If you like my content, share and subscribe, and thank you very much.